We have Doug Peacock with me here today, and you can learn more about what Doug is up to by going over to peep.com. I'll make sure that have that as a clickable link in the show notes as always. But Doug, I really appreciate your time as we dive into infinite banking and what it means. Maybe giving everybody kind of a one on this. So Doug, I really appreciate your time here today.
Jack, thank you so much for the opportunity to come in and share. And while I tell you, I don't think it's for everybody, I think it is especially designed for real estate people.
This is one of those especially interesting topics, but before we get into this,
Sure.
I understand you're a business owner and you were a football coach. Is that correct?
Yes, sir. I was a football coach for 38 years. Absolutely loved it. The bottom line, though, is eventually the body wears out. And when you get hurt at practice and you're a coach, it's time to reconsider things.
I understand that. One of the things that I find though is that when it comes to sports, athletes, coaches, there is a definite layer. Maybe this is in my head, and maybe this is a myth you might want to bust for me here today. But there's a level of success in the business world thanks to their experience in sports. Could you talk to that a little bit? You found that to be the case?
Absolutely. Absolutely. And I want to go, I don't care where you're at. And truthfully, in my experience, it doesn't have to be sports. I want to find somebody who has spent time, added value to other people outside the school. Okay. And I'm talking 18 and under, but those people have realized that not all about them, that they need a team. They need some help somewhere along the line to really succeed and get where they want to go. I think that's automatic with team sports, football, whatever. But that was my choice. But it's truly mindset. If it's all about you, your world's going to be very small.
Before we hit record, you were also talking about the concept of why. Why are we doing this? Why are we getting into this type of business? Maybe why to pursue infinite banking. What are your thoughts on that?
But my reasons were a little bit different. I literally tried to retire from teaching, and I had done all that I was told to do. I put money in every month. I take it out of my paycheck. I don't even see it. Then there's $25 million sitting there when I retire. And when I sat down with my advisor, he shows me this red stash going across the sheet of paper. And I'm saying, that's really pretty, but what is that? And he said, that's the money you're short. We probably should have had this conversation 5 years ago, not 60 days before I'm out of the classroom. And so I literally, that time, didn't understand what I was doing with my 403B, which is a teacher's 401k or IRA or whatever government plan you want to talk about. They all run into the same rules. They're just given different tax paragraphs, and that's the number. But the bottom line is, I found that it was not a system that was designed for me to make money. It was for the government and my advisor to make money. I'm going, wait a minute. And in Indiana, where I live, I'm fixed to be paid on my retirement check. Wait a minute. So I wasn't prepared for that. I literally had a lot of learning to do and relearn to do, because some of the things that I thought were true weren't necessarily true. There were a lot of inconvenient truths there that I didn't know and wasn't told. And the deeper I got, the more I found out that there's a lot of other people in the same boat. And so I ran into a man named Nelson Nash and learned a lot about infinite banking, and learned that I could use that money for getting out of debt. I've got 38 years of football players who went to college who have student loan debts up to their ears that needed to get out of debt. And so it became very simple for me to say, hey, you got student debt, let's talk. And the next thing you know, it explodes. And the kids find out that they can have their student loan debts gone in about 5 years and have $50,000 sitting in that account ready for them to use. That's not a bad place to be at age 25. And that's how it all started. And as I got deeper and deeper into the system, I found out there's a lot of great ways to warehouse wealth, but there's got to be some boundaries on it. And again, that's why you need a good coach. But the bottom line is if you can't control your money, if you don't have access to your money, it's not fake. We have huge issues. And there's not going to be a problem until there is a problem. And then it's too late. And I think there's a lot of protection here. This is not something figured out by the insurance market. It is literally way beyond them and before them. Truthfully, before even our income tax system in 1913. So we're talking about things that are 160 plus years old. And it still works today. The fundamentals are still the same. It's just like football. If you can run, block, and tackle, you can win a lot of games. And the same thing is true here. If you'll control your money, if you'll keep it in a safe warehouse where you know it's going to be there the day that you need it, if it's liquid, you can access it, guaranteed to grow more than it did last year. These are all huge advantages to the guy who's trying to accumulate some wealth and then use it for another asset like real estate or whatever. And I think that's huge for people.
Mhm. You've mentioned it a couple times now, finding that coach or that team member that has the knowledge to take advantage of these vehicles. Talk a little bit about that because frankly, I've run into quite a few whole life insurance agents who throw this term around quite a bit. But after talking to a few, it doesn't seem like they quite completely grasp the concept.
There's a lot of impossible. I'm a member, it's called Bank on Yourself. I'm certified and there, and that's exactly what I follow. You can find it online with a lot of people. There's only a couple of hundred of us, though, across the United States. And I want that training. I want you to know from the get go, yes, this is what we do. We are very narrow in what we use. Example, the insurance company must be 100 plus years old. Okay. We prefer them as old as we can get them. They must be a mutual company. They must be an A-rated company. Put all those things together, and you're going to wipe out a lot of insurance agents right now because they don't know why we're doing that. And back to your why again, it's why do we do it this way? Because it's best for the guy saving the money, but for my athletes, for real estate investors, for coaches just trying to retire. It's all there and they control it. And the amount of control is unbelievable. You get into the wrong product, because a lot of people are hanging out their shields for infinite banking and using index universal life. You are going to be very disappointed. They're great at growing money. So is your IRA. So is your 401k. The bottom line, though, is by the time you need it, that money's not going to be there. Okay. Because it's built on an annual renewable term chassis and the price of the cost of insurance goes up every year. Okay. No, so we won't use them. But the coach is important. Yes, absolutely. Find some questions you want to ask. If you want to call and ask me, or how about it?
Before we get into that, let's take a moment and summarize what we're even talking about.
Sure.
So that we have everybody on the same page.
The problem is when people store their money today, it's generally in two places, generally in their homes and their qualified accounts, their 401ks, IRAs, 403s. Problem is, how do you get the money out of those? You can't without a lot of hoops and a lot of government involvement. If the government's involved, you're not winning that game. Okay?
Mhm.
So the bottom line is we have to find a way to warehouse our wealth or warehouse the money till we have enough or where we're happy with the amount that's there that I can go looking for things that I want to invest in. Okay. Now for your group, it's real estate. That's not a big guess, but the bottom line is not everybody understands real estate. Okay? Warehouse your wealth, make sure it's safe, make sure it's growing, make sure it's all the things we talk about. You control it, you can get to it. There's protection, all those things. Then go do what you do because you have access to the money. And then it's whether it's real estate. I've got people who buy cows I have farmers who buy cows and they're not subject to the market. They can wait till the price of the cows go to where they want them. They don't have to sell when they have the cows. They've got a warehouse of wealth behind them that allows them to do that. And that's just because they don't deal real estate; they deal cows.
So in the nutshell, we're getting a whole life insurance policy that's
Mhm.
going to be a place to store some of your wealth. Do you have to wait for that amount that you're investing into this account, right? You're trying to squirrel away some money in that account on a regular basis. You said it needs to become enough for it to be worthwhile to make whatever investment. Have you found a dollar amount that needs to be squirreled away before you can take full advantage of this?
I think that all depends on the person. If I'm buying multi-unit condos, it's different than if I'm buying 10 head of cattle or a car, an antique car, or whatever I'm doing. The secret is right back to bank on yourself, and why I'm certified with them is because we're going to put life insurance. Most people understand life insurance as a death benefit. It's only useful when I die. Let me tell you something. There's another idea out there. Lets you use that money while you're alive. That's where we're at. So we focus, instead of on maximum death benefit, we focus on minimum death benefit. Okay. But maximize your cash value. Now, what has to happen? That difference is that's the old policy. When you heard of somebody buying a whole life policy and it never gave them any money for 3 to 5 years, that's don't do that. I mean, you have zero money. All the money went where? To the guy that sold it.
Mhm.
Okay. He's loving you. So that's why we completely flip that upside down. Minimum death benefit, maximum cash value, which means I truly cut my own commission. But you make a lot more money and have money available generally within 30 to 60 days. Now, all of a sudden, it's guaranteed to grow. We also have to use mutual companies. And the reason I do that is because mutual companies pay dividends. Dividends are not guaranteed, but they've been paid for the last 100+ years. Again, by the companies that we use. And that's why we're so selective. The joke is that means that somebody got a dividend check during the Great Depression. The joke is, where did they cash it?
Well,
Banks
the
going
way
out
the
of
economy is
going
going
out of
right
business.
now and
Going out
if
of
we see
business.
more bank
What do you-
failures, we're gonna be asking that ourselves.
Well, the bottom line is you've got to control the money. You got to control the warehouse.
Just to remind everybody, head over to peakwealthgroup.com for more information and resources. And if you like what you've heard so far, why don't you give us a moment and share this with another real estate investing friend as they learn about infinite banking. Is there a minimum amount that needs to be squirreled away for this to that before you can really use it?
That again, we're right back to it depends on the person. I have clients, particularly real estate, who have single premium policies. In other words, they sold this property. Now they've got this huge chunk of money. And literally, the last policy that I wrote on the guy, he did not trust his bank. Now, that was like 2 days after Silicon Valley, which I understand his point. But he throws a lot of money one time into this policy and get a whole bunch, 85, 90% right back that he can use. Nothing wrong with it. But I'll also tell you that I have single moms doing the same thing for $150 a month. I will argue that her 150 is more important than his big check
Mhm.
because she's got to make sure that money's going to be there the day she needs it. Okay. Tell you that is it going to work as well as his does? No, it's not because the numbers are different. Okay? He's going to have a lot more money to use than she is. But it's not the amount of money that's critical to her. It's to make sure that it didn't disappear somewhere else, that if the washing machine breaks down, she doesn't have to put it on a 20% charge card. Now she can go fix her washing machine or go get another one. And it's just depending on the person. And the neat part is the maximum, ironically, is not set by the insurance company. The maximum that we put into this is literally set by the Internal Revenue Service. Why? Because everything underneath that line and everything underneath that magic line that they draw, huge tax favors in. Okay. Yes, it grows tax deferred. It goes, but the bottom line, with the right coach, you'll learn how to use all of that money tax exempt. All right. There are 6 internal revenue codes that protect us that way. And then the bottom line is, I'm going to teach you how to use that money off the radar screen of the IRS with their own tax code. That alone is huge. So I promise you that we can go as deep as you want to go. But
Right.
bottom line is, it all always comes back down to control, safety, liquidity.
So could we take a moment and just give everybody kind of a high level idea of how this works? So we set up a whole life insurance policy.
Yes, sir.
It's essentially, for lack of a better way, of a savings account or an investment account.
Okay,
You're
let's
funding
use
this investment. Okay. So
Okay.
it's a warehouse for your money.
Because if somebody, okay, here's a warning sign for you. Here's the warning sign that you got the wrong. If your agent talks about your insurance policy being an investment, run. It is not. It is life insurance. Okay. And there's completely different rules those operate by. Saving is not the same as investing. Okay. Talk about basic, but that's where we're at.
You're jumping the gun on me, Doug, because that wasn't one of my next questions is
My
regarding
bad.
that.
It's almost like I've been around this block before.
Yeah, you know where I was heading. So, are you limited by the amount that you put into this warehouse?
You can be.
Okay.
You can be. Absolutely. Okay. What they don't limit, though, is that you can buy another one.
No, what I was trying to get at is you have one. Let's say you have one warehouse and you're putting $150 a month in there.
Mm-hmm.
It's worth, because it's life insurance. Let's say you got $100,000 policy. Is it worth? You can't just take out $100,000 essentially like a loan, right?
No, you're only going to be able to take out the money that you put in. Okay. And you will not be able to take every dollar out that you put in, because there is cost of insurance, there is cost of marketing, there's cost. It costs the insurance company something to put that product out there. Here's the advantage, though, because we use those mutual companies, dividends are paid. And when that happens, that sets us apart. So that eventually, and that's going to, again, I tell people this is not get rich overnight. Think crock pots, not microwaves. Okay. And if you'll always remember that, it's going to work. But there's going to come a day when this thing is going to put more money into the cash value part that you take out to use than you put in. Now, all of a sudden, who's paying who here? And do this well and with the right coach in the right place, eventually it's going to return more money than you put in total. And now all of a sudden you literally have a tax-free warehouse of wealth that you can use and pass on, and all the other advantages of this.
Give people a time frame that you talk about. Crock pot. Is this a 4-hour cook? Is this a 6-hour cook?
Oh no. I will tell you, I personally try to shoot for paying off, meeting your annual premium. I generally try to do that in 5 to 7 years. Okay. I'm generally pretty good at it. Sometimes if you've spent money like a drunken congressman and you have all this debt, then I probably can't do it in 7. Okay. I used to tell everybody that I will eliminate all your debts, including your mortgage, in 10. And then I ran into that guy and he blew up my average, but it's only one. The neat part is that money is guaranteed to grow. Okay. And it is a contract between you and the insurance company, not in the market. None of that even matters. I can't even tell you what the markets did today. I don't care. All of my clients set a new all-time high today for their money. Every one of them. And You can't.
Can you give us an example? Talk about a time you're helping another real estate investor achieve a goal for his latest acquisition.
Yeah, one in particular, I want to bring to your mind real quick that I've talked to, and they told me to go ahead and share. I'm not going to share their name or anything like that. But one guy put in $400,000 from what single premium. Okay, when he got the policy, there was $370,000 available to borrow to go buy the real estate. He had already picked out the property he wanted. Most most of you already know that when you have cash, opportunities will find you. And that's just the way it works. So his did. So he immediately did that, rolled it over into the purchase, and it was a multi-unit. So as he started getting the income from that, then he started paying the policy loan back so he could do it again. The neat part about that is, and this is again, you got to get the right coach. But when he took that loan out to buy the property, his account still grew the 400. Okay.
As if it's still there.
Just like he never touched it. Okay? Leverage, collateralization. Most of your people are going to understand those terms. Exactly what we're doing. We're not really borrowing our money. We're borrowing the insurance company's money. Okay? And when we get that, they're going to charge me at 5% simple interest, but they're paying me 5% compound, for example. And those numbers will vary depending on the company, depending on the person. Okay. Because the cost of insurance is different for all of it. All right. Age, gender, women are much cheaper to insure than men because they don't do stupid stuff. Okay. Your age, all those types of things, your health rating, those type of things are going to determine the cost of your policy. And everybody wants to get hung up on my policy is expensive compared to what? Somebody paying you in 5 years, the insurance company's going to pay you more money than you put in. That's expensive. No. And you're not 5 years down the road. If you can't see 5 years down the road, I'm not your guy. Because it may be 7. You're the one guy, it was going to be 11. But the bottom line is he had no more debt at that point. I'm not an out of debt at all costs guy. I think that's true. I think you want to do, I think you got to leverage debt, particularly in real estate. So don't hear that. Not what I'm saying. Use your money, but you got to have control of it. And
Earlier, you talked about asking certain questions. Do you have a list of questions that somebody should ask to make sure that they are talking to not only a reputable insurance provider, but somebody who knows that they found the right coach to navigate this?
I think there's key things that they talk about. If they're not talking about dividends, then it's the wrong guy. If they're talking about an investment, the wrong guy. If they're talking about the market or indexes, wrong guy. Okay. We've been sold in America, if you will, or even brainwashed is the term I would much rather use, that the only way to make money is to risk money. And that's not true. I will tell you that the rate, or we have to risk money to get a great rate of return. And we're all on rates of return, and it has nothing. It's not it. Yeah. Do I want it competitive? Absolutely. But does it have to be the highest? No, you're distracted. No, got to own and control the money. Did banks make all these profits on 0% interest? Think about that.
No, just fees.
Your bank made triple digit returns off of your savings account. Okay. You take money and put it into a bank for 1% interest. And I know we didn't get that, but I'm a PE major and I can do the math when it's 1%. Okay? So then the next guy behind you borrowed money from the same bank for his car at 5%. Do you understand the bank just made 500%? They turned $1 into $5, 400% spread. They made triple digit returns off of your savings account. Want to know how to do that? I can show you. It involves the very process we just talked about. Putting money in a warehouse, keeping it there till you need it, leverage it, collateralize it, find a way to pay yourself back.
This is again an example of one of those reasons, Doug, is there's a tagline to the show. And I don't know if you're aware of this, but the tagline is that you can either put in 10,000 hours and become an expert or learn from somebody who's already made that investment. That's why you need somebody like Doug to navigate this type of structure, this type of process, because like I said, I've talked to a number of insurance providers and they throw this infinite banking term around, and at a certain point it loses all meaning.
It's truly why I don't even like the term, but that's what everybody knows it as. Truthfully, got to find a way to collateralize money while it's still growing, but yet you haven't used it. And I don't know any place else on the planet to do that. Now, I'm sure there are more, but that's from a football coach. Okay. So I don't understand every football offense, but I understood mine really well. And it's just it's the same concept here.
Right.
Fundamentals don't change.
Doug, if you're ready, I'd like to move into our rapid fire questions. But before we do, again, it is peakgroup.com and it's going to be a clickable link in your show notes. But if you're ready, Doug, we'll jump right in.
Absolutely.
Now, here's your chance to bust a real estate or business myth, maybe something associated with insurance. What is a myth that you'd like to bust here tonight?
I'm going to pick the real estate because everybody makes money in real estate, right?
Absolutely.
Not, not if you don't understand it. All right. I don't, I like real estate. I don't invest a lot of money there because I don't understand it well enough to do. But I want you to understand I've got a warehouse behind me that's got money that will back me till I learn enough to make sure I can make money there. Then have at it. Like I said, it doesn't have to be real estate. I got guys buying cows. I got guys buying antique cars. Okay. That's what they understand. That's what they know. That's what makes their day. Please understand where you're going. They don't just think that just because it has a certain name. I've seen a lot of people tell me they've got an infinite banking policy. I said, do you mind if I look at it? And I looked at it and there's not even a dividend there. It's not even a mutual company. Okay. They can't borrow. They can't borrow from their money for 5 years. Why did you do this? And if somebody sold them a term, somebody hung out, hey, I'm an insurance guy that sells infinite banking. And the bottom line is that's not true.
So you had a lot of financial gurus, if you will, that kind of soured a lot of the population on the whole concept of whole life insurance.
Sure they did. Sure they did. Because they want you to buy a term, the cheapest insurance out there, which by the way, only 1% to 2% pays off, by the way. Okay. Term's really great when you're 20 years old. It sucks when you're 65 because you can't afford it when you're 65. So what happens at age 65? People pay the new policy fee or the premium? No, they drop the insurance. Now there's no death benefit. The only way for term insurance to buy or to pay off is for you to die. I got nothing against term insurance. If I have a fixed time on a liability and I want that covered, I'm going to go buy me some term insurance. It is cheap. It is easy. Guys, you can buy it online. You do not need a coach to buy term insurance. It's X amount of money for number of years. And if you die during that time, pays your beneficiary this amount of money. That's not what we're about. We're going to have a death benefit. It is going to be far more than you ever put in. But I truly believe that your need for financing life is far more important than a death benefit when you're gone. And that's the difference. We're going to make sure you have a way to finance cars, education, weddings, whatever you want or need throughout your life. Oh, and then when you die, guess what? The death benefit is still there. You don't die and you live long, we're going to turn that pile of money into a retirement stream. And by the way, all of it was tax exempt. Oh, where do you think taxes are going? There's a lot there. But I
Yeah.
promise you, please do your own due diligence. Learn this. Guys, a high school football coach could get this. Got it? You ain't got to be smart. Head slaps were legal when I played.
Give us a book recommendation or what are you reading right now?
I will tell you, I am a man of faith. I believe that if you'll go through and read a proverb a day, there's 31 of them, y'all. So you can read one proverb every day in the Bible. And by the time you get a couple of years in, you're going to have a master's degree in business and money. It will help you tremendously. I still do that, by the way. I
You know,
love,
that is the one book in my life. In fact, when my wife and I were just talking about this the other day. Every single time, I'm not gonna give out my age, but I've been around the sun a few times. It's still this day when we read a verse or a chapter, there is something new that comes out of it every single time. And I
absolutely.
don't and I don't know if there's frankly, I don't know of really a lot of books that do that. It's quite miraculous.
If you are in, I am a Simon Sinek fan. Also, his book Begin with Why. If you don't want to read the book, go watch the YouTube. It's 18 minutes long, and you can have it all in 18 minutes. I like that. And I don't know if you're into sales, I want you to read a book called The Challenger Sale. I think it's in sales, which I don't feel like I said in that class very well. I would rather have a conversation with you and show you what I'm going to do for you. Okay.
Mhm.
But it's not relationship. Everything that everybody tells you, get a relationship. And the bottom line is the guy that sold the most is the people who challenged what they thought. And now what you thought was true about your money wasn't true about your money. When would you want to know? And that's the question that keeps hitting me in the forehead. And the answer is 50 years ago. That's not possible. So I got to do something today. That's exactly how I got into the business. And I thought, man, I can do this. And ain't that important ever since. So
Sure. What is the biggest business or coaching mistake you've made, and what did you learn from it?
coaching mistake was calling a fake punt on the wrong end of the field. But that was that didn't hurt anybody but me. The I have as a coach and an educator, I have a huge trust factor of people, and it has cost me because not everyone is honest. It took me about a year to figure out there's more dishonest people in this industry than the entire coaching industry that I met in 38 years. And and they'll steal your money. They don't care about you. And so I will tell you, do your due diligence, make sure you read. It's not hard today. There's this thing out there called the internet, and it'll tell you about everybody. If there's not social proof there, if there's not somebody you can talk to, then beware. Buyer beware, right?
If you could go back in time and give your younger self one piece of advice, what would that be?
Sounds very self-serving, but I would have bought one of these policies when I was 18 years old, when I was first eligible. And I would have done whatever. I baled hay, I cut hogs, I did whatever I could do to make money back then. And I would have put it in one of these had I understood what was going on. And then you and I would never be talking because I wouldn't be sitting here trying to do this. I would be somewhere in a nice warm island somewhere.
No, well, I get that similar type of response all the time from real estate investors. Like
Uh-huh.
everybody wishes they would have known what they know now
Right.
and was able to apply it. Like it,
Right. The knowledge isn't the secret. Knowing something won't get it. How to apply it is the key. Okay. Guys, every great athlete has a coach. Please get one. I don't care if it's in real estate. I don't care if it's in infinite banking. I don't care what it's in. Go get a coach. Go get a mentor. All right. Oh, and then by the way, turn around and coach somebody and mentor somebody also. Help somebody else out that's behind you, young.
okay, you have 60 seconds and you're going to give everybody one piece of advice that they can implement today. What would it be?
I would just tell you, I would love to coach every United States tax-paying citizen to coach the difference between rates of return and building true wealth. And if you understood what I already know, and then you could implement this, you could access to your wealth your entire life, even through retirement. And if we do it right, you won't even have to file a tax return. Learn about this.
Doug, this has been a great conversation. Is there a question or concept you wish we would have covered here today?
That's hard. I will tell you, know what you want your money to do for you. Okay. If you don't have a reason for saving it, it's hard to do that. Have a reason. Your vision doesn't have to make sense to anybody else. It's your vision. You don't need to explain it to people. It doesn't have to make sense to them. And sometimes family's the worst, by the way. Okay. No, and ask all the questions that you have. If you're if you got an agent that you won't answer your phone call, you got the wrong code.
Well, Doug, this is great. And it's great that you were able to take this all round robin. We're right back where we started. Your basic answer to most of it is start with your why on every single aspect of this. Why are you doing this? Again, it is peacockwealthgroup.com. Take a look at the show notes. It'll be clickable there for you for everybody to find you easily there, Doug. But I
Thank you.
really appreciate your time, and I hope you'll come back again sometime.
Anytime, and I love what you're doing. I love your experience. It's not haphazard, and you, like I told you already a couple of times, you've done this before, and it shows.
Well, I appreciate
Very
it, Doug.
nice and open to your network. Yeah, let's talk. Talk costs nothing to talk. So, thank you for your effort to reach out to me, and hope I added some value to your listeners.
Yeah, you definitely did. I appreciate it. Thank you, sir.